This is Joseph Giacobelli. I'm an analyst, investor, author, and the host of the Asia Climate Finance podcast, which is a philanthropic series dedicated to the promotion of knowledge and discussion on sustainable finance in Asia, from the perspective of the business of decarbonization and the energy transition in the region, which consumes about half of the world's energy and electricity. Please support this effort by liking and by subscribing to the podcast. Hello, and welcome to the 27th episode of the Asia Climate Finance podcast. Today we're talking about carbon markets. It is a subject that we've alluded to in a couple of the previous episodes, and today we're looking at where we're at now and where we're going, especially in China. Now, the global carbon markets are an important source for funding the decarbonization needed to mitigate the climate crisis. The compliance plus the voluntary global carbon markets amount to almost $1 trillion. They are set to grow dramatically. For example, the smaller of the two, the voluntary one, will grow fivefold by 2030 from $2 billion in 2022, according to a report recently published by Shell and BCG. China will be a key player in the growth, given it has the world's largest carbon market. Our guest is Julien Hage from CICC Asset Management. And Julien has got a very interesting background because in his financial markets experience, he's worked both as a trader and also in asset management. Now, Julien first shares his thoughts on the basics of the carbon markets and trading, especially the EU emissions trading system and how relevant that is to the Chinese market. And then he evaluates the current state of the markets in the EU and in China. As always, all views are purely personal and do not represent views of present or past employers. Enjoy the show. Hello, and welcome to episode 27 of the Asia Climate Finance podcast. And today we have Julien Hage. And we're going to speak to Julien about carbon markets, as I mentioned earlier, because it is a very, very key subject. But first, let me welcome Julien. Julien, welcome to the Asia Climate Finance podcast. How are you today?
Hi, thank you very much, Joseph. I'm very well, thank you. Thanks for the invite.
You're welcome, and it's great to have you, especially because as we will see in a few minutes, you've got some unique experiences that you can share. But starting from the top, Julien, could you share with the listeners a little bit about your background, please?
Yes, sure. So my name is Julien Hage. I've been working in finance for about 20 years, 15 of which were spent in Hong Kong. I've worked both in asset management and the brokerage business, and most of my professional experience was around trading, so equities, foreign exchange, and listed derivatives. And last year, I joined the CICC Asset Management in Hong Kong as head of international business.
That's a very interesting background, Julien, especially given you've got kind of both sides of the coin, so to speak, the trading side and the asset management side, which gives you a unique perspective. Not all of us may know CICC Asset Management. So could you perhaps give us a little bit of a quick introduction to the group and what it is? And also, at the same time, could you also talk a little bit about your involvement in carbon, please?
Yes, sure. So CICC stands for China International Capital Corporation and is one of the leading Chinese multinational investment management and financial services company. It was created in 1995 and was actually the first international joint venture investment bank in China. So it's headquartered in Beijing, but has offices, across Asia, in Europe and US as well. As for CICC Asset Management, it provides Chinese and international investors with a comprehensive range of investment products and services, including equities, fixed income, quants, and multi-asset solutions. currently manages about a bit over $100 billion right now. So early last year, CICC Asset Management Hong Kong launched the first Greater China ETF on carbon. The ETF is listed in Hong Kong and tracks the ICE EUA Carbon Futures Index. So basically, last year when I joined CICC Asset Management, that's actually when I started to get involved in carbon markets and, starting to learn a bit more about them and, get really involved in that space.
And I think, again, what is important about your background, I mean, for our listeners, is that you've got this kind of multiple perspectives on this very, very important source of financing for decarbonization. Going to the topic of the carbon markets, which is today's focus of the conversation, can we talk a little bit about the carbon markets in Hong Kong and in the Chinese mainland? Just a very broad picture background for those of us who don't know.
Yeah, sure. Maybe I'll start with, just a bit of background in terms of, the carbon markets themselves. And sure. Then, just to give a bit of understanding. So I will take a few shortcuts, I guess, just to make things a bit more clear, I hope. So when we talk, about the carbon markets, there are basically two types of markets. There's what is called the compliance markets and the voluntary carbon markets. So compliance markets, which are also called mandatory markets, they, refer to what is called emission trading schemes, ETS, in which carbon allowances, they're traded and regulated by, local, national, or international governments. So a carbon allowance, which is also called carbon credit, is basically a permit which is issued by the government entity to allow the firms in the scope of that program to emit 1 ton of CO2 or equivalent as part of their industrial activity. So compliance markets usually follow what is called a cap and trade mechanism. So the governments assign a cap in terms of emissions, and the companies who are in scope, they basically need to buy enough of such allowances during the year to cover for the emissions which are, part of their industrial activity. Each year, the cap is then lowered, and theoretically, then therefore, it means that that increases the value of these permits or the cost of these permits. So the goal being basically to push the companies to reduce emissions or develop, greener solutions. Carbon markets, they're an important element of the emissions reduction plans for two reasons. They're a tool which is being used to limit, greenhouse gas emissions, and they also actually turn CO2 emissions into a commodity by giving it a price. So worldwide, there are about 30 ETS operating currently. The largest one, and actually the oldest one, is the European Union's ETS, which was the first one created and started operating in 2005. Specifically for the EU ETS, the companies, what is called the compliance entities, which need to follow the program, they basically have to follow the two commitments. The first one is to reduce by 2030 the greenhouse gas emissions to at least 55% below the 1990 greenhouse gas levels. And the second objective is to achieve net zero greenhouse gas emissions by 2050. So that's, for the compliance markets. I mentioned there's another type of market as well, the voluntary carbon markets. So these are basically markets which are aimed at financing projects that reduce greenhouse gas emissions. As the name indicates, they are done on a voluntary basis, and they allow basically participants to purchase carbon credits from sellers to offset their own emissions. So usually for the voluntary carbon markets, these carbon credits are usually called carbon offsets. They are usually issued by NGOs, and they also represent 1 ton of emissions avoidance of removal. So these projects, as part of the voluntary carbon markets, they're aimed either at reducing or avoiding greenhouse gas emissions, either by using renewable energy or energy efficiency improvements, or also by capturing greenhouse gas, so with reforestation or direct air capture. Obviously, not anybody can issue products on voluntary carbon markets. They need to qualify. The projects need to follow specific standards. Mm-hmm. So there are lots of different standards. There are international standards, domestic standards, and there are also independent carbon standards. The largest ones being the verified carbon standards, the gold standards, and the climate action reserve.
Right.
As of last year, there were about 21 voluntary carbon markets operating.
Right.
And in terms of size, the compliance market are much bigger than the voluntary markets. To give a number, the compliance market, the trading on compliance market for last year reached about $900 billion US, while on the voluntary carbon markets, that was about $2 billion.
Right. And I think there was actually a forecast from a report produced by Shell and BCG, the Boston Consulting Group, which expects these voluntary carbon markets to rise fivefold between 2022 and 2030. But again, as you mentioned, and that's very, very important, the voluntary ones are much smaller than the compliance ones. So in terms of, again, sticking to the backgrounder and the fundamental view, when we're talking about trading carbon credits, trading emissions, such as in the ETS, the European trading system, who actually trades them, and how do they trade them?
So in the compliance market, so basically you have the compliance entities, so the companies which are submitted to these regulations, and they need to cover their emission needs. So these tend to be the companies which emit the most greenhouse gases. So the power plants, the iron and steel plants, cement producers, aviation, and so on. If we look at the European ETS, in total there are over 10,000 entities that participate. So in terms of trading, the way it works is that the government allocates some of these allowances either for free or through an auction, and then these allowances, they can be traded on the market. So the companies who emit less CO2 than the cap that they need to respect, they actually can sell their carbon allowances and generate additional revenues for the company. So in terms of participants, in addition to these compliance entities, there can be other participants and intermediaries. So it can be brokers, it can be also some of the funds who get involved in that space. So there are more and more players who also participate into these compliance markets. For the voluntary carbon markets, they allow private companies and individuals actually to purchase carbon credits on a voluntary basis. So some of the actors of these corporates who basically commit to reducing their emissions. It can be part of their mission statement or so. And these are not submitted to any compliance requirements, but there is from their own decision. So you could an example could be a company which organizes conferences and these sort of events. They know they have people flying from different regions. They have a specific carbon footprint. So these could be the sort of companies who also could want to buy these sort of carbon offsets on voluntary markets. But obviously, very large companies also who decide to go green are also participating in these voluntary markets.
But when we're talking about the actual trading, I guess the bulk of the trading happens on the compliance market, not just because the compliance market is bigger, but also because there's a little bit more transparency and uniformity relative to the voluntary market. Is that correct?
Absolutely. So I think, in terms of volume, obviously compliance markets are much bigger. And also on voluntary carbon markets, actually what happens is that there may be a company or project which issues certified carbon offsets. And so they present the project, and you may actually have a company, for example, who wants to offset their carbon emission, who is going to buy it directly from them, even without trading on the market. They can have sort of bilateral agreements. So in many cases, what happens is that also once a participant buys these carbon offsets, they tend not necessarily to want to trade them for the time being. So their goal is to offset their own emissions, and so basically they're seen as as funding these projects, and they basically keep these voluntary carbon credits or offsets. So also from this angle, that explains why there tends to be also less trading on the voluntary markets.
Just a silly question again for those of us who are not fluent on carbon markets and on trading and on derivatives, all three in my case. But if we're talking about, so there's been quite a few disruptions in the last, let's call it 12 months since Russia's invasion of Ukraine, which kind of disrupted the energy markets within Europe. Question number one, is that the case? I mean, were the carbon markets disrupted as much as the gas and other fossil fuel markets? That's my first question. Again, sticking to the basics.
Mm-hmm. So I use the EU ETS as an example, and the reason being that it's the most liquid market. So actually, the trading which happens on the EU ETS represent 90% of the volumes traded globally on compliance markets. So that's is basically everything happens there for the time being. And so yes, on the EU ETS, definitely the carbon products tend to be already quite a volatile one. And obviously, with what has happened, with the invasion of Ukraine, there's been additional, volatility, which was, seen across the carbon market. Lots of the trading also obviously is based on the anticipations of these companies in terms of how much they're going to emit, how active they're going to be. So when there are these sort of situations, I think there's even more uncertainty, and that can lead to more volatility on the carbon prices.
So you've mentioned the word volatility. So are there any kind of ways for those companies trading in Europe, and you said 90% of total volume, to kind of protect themselves? I mean, is there any derivative products that they can buy to, as a insurance policy, quote unquote, to protect themselves from such high volatility?
Yes, definitely. So there are basically some futures which exist on the carbon EUA. So that's also a tool for these compliance entities to sort of hedge their needs and to basically fix a price for all the allowances that they're going to have to buy. So instead of buying it little by little, I guess over the year at the back of their activity, they may want to buy or to cover part or all of their expected needs with future markets. And for the European ETS, there are some futures which trade on for example, on the ICE market, and that's also a very liquid contract. That's actually the reason why when CICC Asset Management Hong Kong launched the carbon product, it's actually based on this future because it's very liquid. It trades very well, and that's an instrument that is very easy to basically to trade.
That's great. So thank you so much, Julien. I think it is particularly useful for those of us, including myself, who are not 100% on top of the subject to get a little bit of the background. And for listeners, the reason why we were talking, spent quite a bit of time talking about what's going on in Europe and some of the very, very basic mechanics is because Europe right now is 90% of total volume traded, but probably, and I'm sure Julien will have some comments, 5 or 10 years from now, Europe will not be 90% of the total because there's a little market called the Chinese market, which is appearing. So could you tell us a little bit about the current state of the carbon markets in the Chinese mainland? And especially, are there any major differences with the European energy trading system and the EU allowances, which has already been around for a couple of decades, as you mentioned earlier? Also, what lessons can China draw from the European experience? So I guess it's a question with 3 phases or three sections. One is, where are we at in China right now? 2, what's the major differences with what's going on in Europe on the carbon trading market, carbon trading and carbon markets? And thirdly, what are the lessons that China can learn from the European experience? And I wanted to mention on this last point that one of the reasons why China was able to accelerate electricity trading over the last few years very, very quickly and surprised a lot of people in terms of the percentage of the market which is involved in electricity trading in China right now, is because they could just learn from places like Europe. There's a lot of very intelligent, very capable people looking at these markets, and then they can look at Australia and learn the Australian experience. So when they apply that to the Chinese market, of course, there are Chinese features, but there are a lot of lessons can be learned from the mistakes that Europeans made and from the Australians made or whatever. So that's the reason for the last part of the question.
Yeah, sure. So yes, I didn't indeed answer the question earlier when you asked about China. So obviously it's a good time to discuss this. Maybe contrary to belief, actually carbon markets in China, they started back in 2013. So in 2013, there were 7 provinces and cities which carried out pilot carbon ETS programs. There were actually 2 additional ETS added in 2016. So there are currently 9 carbon markets in China, which were these, at the back of these pilot programs. So there's one in Beijing, in Shanghai, Guangdong, Shenzhen, Hubei, Tianjin, Chongqing, Sichuan, and Fujian. So each of these had, a different scope, obviously from a geographical perspective, as well as, the entities which were, or the companies which were in scope were a bit different. So, the idea, I think, was to make different pilots and see and get sort of comfortable with how that worked and, how you can monitor and so on. Now, in 2020, President Xi Jinping announced, a goal for China, carbon peak by 2030 and carbon neutrality by 2060. And in 2021, so the following year, the China national ETS began its operation. So an additional ETS market. So that national ETS market operates on the Shanghai Environment and Energy Exchange, and the coverage is national. So contrary to, the initial pilots, which were sort of, provincial or limited to some cities, this one is basically national. China being, for the time being, the largest emitter of greenhouse gases. So that basically by default makes it immediately, the largest ETS market in the world. Now, in terms of scope, for the time being, only the power companies are covered in the scope for the national ETS. There are actually over 2,200 such companies, but all these companies, and from an emissions perspective, they actually cover 40% of the national emissions. So similar to what happened in Europe and in some other ETS markets, the scope tends to start with the companies which sort of emit the most greenhouse gases,
the biggest
to be expanded. Exactly. So right now, as one of the difference to point out with compared to, let's say, the EU ETS, so the China national ETS now covers only basically power generation. Another difference with the EU ETS is that there's no cap and trade. So I said most of the ETS markets are cap and trade. For the time being, the China ETS has no cap or no limit. So currently, all the companies in power generation sector, they are being allocated these emission allowances for free. So just to remind what I was saying earlier is that in Europe, there are also lots of companies which receive also EU emissions allowances for free, but not in the power sector anymore. So in other sectors. Also there's something a bit specific as well. Maybe just what I want to explain is that I think the goal for the China ETS is a bit different. The goal is to make it economically harder for the carbon-intensive companies or industries to continue operating. So either they need to sort of reform and improve, or basically they're going to have to shut down. The incentive is really to create more efficient plants over the less efficient ones. So that's it was basically started in 2021. So also one of the goal is also to improve for the government to improve the quality of the greenhouse gas emissions accounting and reporting, and that's going to be an important step for policymakers in terms of their forecast, their monitoring progress, and obviously to issue new policies. So another small difference also, which is happening also on the for China, is that the entities, they can use actually carbon credit offsets up to 5% of their emissions. So these carbon offsets are what are called Chinese certified emissions reductions, and they're basically carbon credits under volunteer carbon markets. But again, these can only account for 5% of the emissions. So it's a way, I think, also for these companies to a bit of experiment as well, and potentially investing also in some of these projects as well.
In terms of lessons that China can learn from Europe, would one of them, we've seen volatility is an issue, right? Because if you, as a former trader, this better than anybody else, if you're at the wrong end of the trade, it can be extremely painful. And if you're a corporate, you can be losing a lot of money. So I guess, one of the things that China can learn is what are the kind of mechanisms that either the regulators or the market operators or the traders are taking to kind of protect themselves from this kind of volatility. Would that be one of the kind of lessons, especially that, we've seen that Europe has been around, ETS in Europe has been around for almost 20 years. So obviously there's been a lot of ups and a lot of downs, literally. Yes. Yeah. Do you think that that's one of the lessons that can be learned? And could you clarify that?
Yeah. So my thoughts is that Right now, and that's why currently the emission allowances are issued for free. So the price of these allowances actually fluctuate very little. So it's sort of only the sort of most efficient companies who actually need a bit less allowances can sell. They're going to sell and make an extra profit.
Right.
So that's also to incentivize. But currently, given the fact that the bulk of the allowances is given for free, so the price of these allowances is still very low. But that's and I think that's what is gonna happen going forward, is that the allowances are going to be reduced, and then and I think maybe what they will be able to learn from the experience on the EU ETS is how quickly you have that sort of cap, and how quickly you reduce it. I think also from China's perspective, from their goal, the carbon neutrality is 2060. It's not 2050 as it is in Europe. So gives them sort of a bit more time to be able, I guess, to fine tune these mechanisms to achieve these targets. So I think that's one of the areas that can help a bit limit that volatility on the carbon price.
Right. So I guess another lesson that China can learn from Europe would be on the kind of make transparency or the reporting side of things, right? Because I remember that historically there were some major scandals of companies saying that they were reducing emissions, but they weren't, et cetera, et cetera. So do you have any thoughts about that side of things, the reporting side and the kind of verification side?
So I think, that's obviously a very valid point, and I guess in all ETS they're going to face the same sort of issues. I think also one of the design is that the allowances which are given to companies are following a sort of benchmark which was used. So they've taken all the sort of power stations, power companies, and they've looked at the most efficient ones, and they've sort of said, oh, this is the sort of target, and that's the reason why the least efficient are going to have to either change, improve, or otherwise they're going to basically it's going to be too costly for them to operate. So I think even from I guess from a benchmark perspective, that's a lot of of power companies which have submitted their numbers. So that's, I think that's a way to sort of not rely on one specific number, and to basically have a range and then select the most the most efficient ones. And I think in terms of reporting and monitoring, I'm sure there are going to be regular audits. I'm not saying there are not these who are going to try to maybe like go around and and maybe how would you say announce smaller numbers, but I think it's not necessarily something good for them to do, because there are going to be audits, and and I think for the time being, like the price for buying these extra allowances right now is much better than getting a fine. So for example, EU ETS, when companies they don't match their they've produced more greenhouse gases than they have allowances. And not only have they have to pay for these extra allowances, but they get a significant fine. And so I think that's also an element which companies will think clearly, because I'm pretty sure the government would be quite strict about this, and the fines would probably be hefty. So it's going to, I guess, prevent companies from playing with numbers.
One final question on these, kind of what lessons can be drawn. What about derivative products like the futures? Have you seen in your experience any major issues with those those products? I mean, are there any particular risks or areas where, the Chinese regulators or operators of the markets can learn?
So actually in China, on the the 9 markets which I mentioned, which were initially like pilot programs, they actually, on some of them, there are actually some forward contracts. So that's a way also to experiment and to be able to have the participants start to get familiar. There are actually other initiatives. For example, in Guangzhou Futures Exchange, there are plans to launch future contracts on carbon as well. So there is going to be additional financial products in the carbon space. Now, maybe from obviously it remains an investment product in a sense. So it's basically a commodity or whatever, but there's a price to it. There is some volatility, and therefore, there's always, I guess, a risk. But I think the risk is more in terms of, what sort of policies may impact and, how companies are going to react, more than, the functioning of the financial products themselves. So, if we look outside of the carbon market, there are basically billions of dollars who are trading on future products, whether, indices or whatever, and there's no issue specifically with these. It's more a question of how the underlying moves and and indeed the impact which it may have from a P&L perspective.
Great. Still regarding maybe one last question about the carbon markets now today as we speak. What about Hong Kong's ambitions? I mean, Hong Kong recently has been in the news about carbon in general, carbon trading, etc. Do you have any thoughts about Hong Kong?
Yes. So actually, October last year, so quite recently, Hong Kong Exchange launched a new international carbon marketplace called Core Climate. So it's a voluntary carbon credit trading platform. Which allows companies who are seeking to offset their carbon footprints and to match them with owners of projects or verifiable projects to reduce greenhouse gas emissions. So the projects which are actually on that Core Climate platform, they follow international standards. Such as the verified carbon standard, which I mentioned earlier. So, internationally certified projects. At the moment, there are over 30 international projects which are available on the platform, and so this is definitely going to increase very quickly because they are going to be able to cover obviously not just region but also global projects as well. And one more thing actually about that Core Climate platform, it's currently the only carbon marketplace which offers Hong Kong dollar and renminbi settlement for the trading of the international voluntary carbon credits. So that also makes it a bit unique as well. And so there's obviously going to be quite a lot of developments in that space, I believe.
And what's the volume like? Is it still kind of early stages, very early days?
Yes, I think it's still early. I think within the first month, I think in terms of trading, if I recall correctly, I think it was about 400,000 tons of CO2, which were sort of offset with these through the platform. So it's still early. But it's definitely gonna expand quite quickly.
So I guess if we can move to the final kind of area of discussion is the outlook. Do you have any thoughts about the outlook for the carbon markets in China and in Hong Kong?
So I think we touched a bit early on some of these points. I think, I guess one of the key elements which is going to bring these sort of development to these markets is, the regulatory and policies which are going to be adopted, specifically in China. So, all markets, globally, all the ETS, they continue to grow, they continue to evolve, especially, as we're going to get closer to, the net zero emissions deadlines. In China, the scope, there's already, the plan is already to expand the scope, not just to the power plants, but also to petrochemical, building materials, steel, and domestic aviation. So, again, means that from a trading perspective, it's going to grow significantly. And obviously, in terms of, total number of greenhouse gas emissions is going to be reduced, hopefully drastically. I think we mentioned a bit earlier, but I think there's going to be additional development also on the financial instruments. So I mentioned there are already some forwards. They're looking at futures, but also there are other initiatives to look at options and swaps. So it's just to offer sort of a ecosystem for carbon products, which is on par with other asset classes. I would say more developed asset classes, such as on equities and maybe foreign exchange. And I think also another factor which actually is worth mentioning, because there was some news at the very beginning of this week. I think the number of participants is going to increase. So the participants to these markets. So right now, like in China, only the sort of the compliance entities, they can participate. But they announced it earlier this week. There would be, they've basically given the approval for 6 financial service companies to be able to participate in the carbon market, and CICC is actually one of these. But I think the number of participants is gonna increase. So intermediaries and so on, and that will also make these markets probably more more liquid, and also we'll see, I think, definitely more additional turnover. Maybe and on Hong Kong, my view is that Hong Kong, and in particular the Hong Kong Exchange, has always been acting as a connector between the mainland and international markets across asset classes. So I see definitely additional initiatives which are going to be developed around carbon trading, whether it's to offer more products and services in that space. There is also a study which is happening to assess the feasibility of setting up a regional carbon trading center within the Greater Bay Area. So I think that's that's a space where we need to keep abreast of what is happening, because I think it's going to continue to evolve, and we just want to stay on top of how that evolves and how it can potentially provide opportunities and for participants, and also potentially also investors as well.
One last clarification or question. I mean, in Europe right now, you've got the corporations which have to participate, whether they like it or not, those within the specific sectors that are obliged to participate. But can individuals also, individual investors or, I don't know, funds also participate in this market in Europe? And if so, is it likely that we're going to see that happening in China as well?
Yes, definitely. I think that's a very good point. So indeed, on the EU ETS, I think there are many more participants or intermediaries and so on. But some of them are funds actually. So it can be funds on carbon products. And I think that's an area also which is going to probably at a later stage also be considered to be added to the China ETS. I think one point which I think we can add as well is that, well, we all know, obviously, from a greenhouse gas perspective, we have So, the idea is to be able to reduce the total amount which is generated, not just limit ourselves to very specific areas. But again, here regulation is, I think is going to be also a key instrument to have these different countries or regions work together. Europe has already announced what is called the carbon border adjustment mechanism, which is a way because what happens right now, or what they're maybe a bit concerned, is that as is going to be more and more costly. Well, they think some of the companies could potentially delocalize and go outside of the EU to be able to produce. So this is called carbon leakage, because these currently are not under scope. But with that new CBAM initiative, that will be the case. So even imports into Europe will also have to pay for allowances, or will have to prove that they have paid in their own jurisdiction. So, I think that's also going to impact obviously China being a very large exporter, for all the goods which are going to be imported to Europe, then they will be subject to this tax. So it sort of makes sense for also in China to sort of slightly start increasing, the price of these allowances, so that, their companies will not be at disadvantage.
Right. No, that's really insightful in terms of the outlook. Julien, I don't want to take too much more of your time. I know it's early evening in Hong Kong, but I really, really want to thank you for your time, for the insights, and I think that's lots of value-added stuff in there. Thank you so much for participating in the Asia Climate Finance podcast, Julien.
Thank you very much. Thanks for the invite, and thanks for allowing me to share some of this with your auditors.
I hope you did enjoy this episode of the Asia Climate Finance podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.